We're going to do a brief video of PRTA Market news. That's Prothena Corporation, and we've got a daily chart for Prothena up in front of us here with a 5-day moving average in green, a 20-day moving average in red, and a 200-day moving average in blue. And you'll notice we have this huge gap here. We got about $11 gap this morning on this stock. Is trading up $22 now at 53.52 cents, $53, and volume is about 5 million shares on an average daily volume of about 400,000 shares. So there's tremendous activity on the stock. This stock and Biogen both are rising similarly based on fundamental information that's come out on them. But I put it up here because it's an interesting stock to take a look at real quick. You'll notice this stock's been in the bear market since January of 2022. Came down here and put in a bottom right around the 16th of June at around $21. You'll notice that this stock goes down, sideways towards the 200-day moving average, down again, sideways, and ran straight into the 200-day moving average here. Then all of a sudden we get this huge jump. Now we're going to take a look at a different chart in a minute, but we can see that this jump right at the 200-day moving average, anything below the 200 days is a bear market, anything above is a bull market. So this stock has just jumped itself right out of a bear market into a bull market. Now, would I say that this is a classic traditional bull market? No, this is a classic traditional bull market. This is just a huge gap in a stock and a 1 or 2 day huge rally. Keep in mind, almost all gaps get filled. Not all gaps, but almost all gaps get filled. So there's a lot of risk in this stock. Now this is a fundamental move here in my opinion, and it's got tremendous risk here right now from a bottom of about a daily bottom so far of about whatever that is, 47 bucks, and all the way down here unsupported to $34. There's absolutely no support here whatsoever. So we have over $10 of risk in this stock from the daily bottom today, assuming it doesn't go any lower. So this is a risky stock to get into in my opinion, because gaps almost always get filled. Let's go over and take a look at the weekly chart and see what's going on there, because it's interesting. We can see that this is the same stock. This is PRTA, Prothena Corporation, but it's weekly, and this is a 200-week moving average, 20-week moving average in red, and a 5-week moving average in green. And as we can see, this stock never went into a bear market on a 200-week moving average. You can see it came out of it in March of 21 and has been crazy volatile, but it bounced off very aggressively, bounced off the 200-week moving average back here in June of 2022, and you can see it's a totally different picture when you look at a weekly chart. That's why it's really important when you're using moving averages, especially, to look at the daily, weekly, and sometimes the monthly charts to get an idea what's going on. So this stock on a weekly was in a bull market anyways and had never gone into bear market territory, and so not ridiculously unusual that you would get a big move in a stock like this. But keep in mind, when we go back to the daily chart, if you're thinking about trading this stock, sure, it could skyrocket up even higher, and it probably will, but there's a ton of risk in this eventually. It's very difficult to say how long it's going to take to fill this gap, but almost always gaps are filled. This is not a stock that trades in big gaps. I don't see a lot of big gap days on this stock, so it's hard to say. When you're dealing with fundamental news like this, in general, you have to just stick to what usually happens, and that's gaps are usually filled. But there's no way to tell. All my opinion, all for entertainment purposes only. But that's what I see today, a stock that is in a now bull market territory on a daily chart and had been in bull market territory on a weekly chart. But obviously, you trade with your own risk. There's a lot of risk in this stock right now, in my opinion. We do not cover this at rbamresearch.com. The volume's too low on an average daily basis for us to cover it, but we do cover every morning before 7 a.m. Monday through Friday, 190 plus stocks, and you can get them absolutely free, no credit card required. I'll show you how to do that in a minute. They're 1, 5, and 20-day hold periods. Basically, you buy in this 1-day column, close out the end of trading day the next day, end of 5, end of 20 trading days. So if you bought in this 20-day column, buy today, close out at the end of the 20th trading day at a loss, or take your profits sooner, in every case, as soon as you get them, assuming you do. That's the way these algorithms work, and again, they're all for entertainment purposes only. You trade at your own risk, have to do your own analysis. Let me show you how to get all these for free and a lot of other things at rbamresearch.com. You get 190 plus stocks, the major forex pairs, BTC crypto, and the most liquid futures contracts. There's a link in the description below that will take you to rbamresearch.com. You put your email in there and get it all for free without a credit card. Again, updated before 7 a.m. Monday through Friday. If you like this video, please click the like button. If you want to subscribe, please do that as well. If you have some comments on daily versus weekly moving averages, we'd love to hear them in the comment section below. And keep in mind, everything you've seen or heard on here, including my commentary and the entry prices, are for entertainment purposes only. You can't use them for anything other than entertainment. You should always do your own analysis, and you definitely trade at your own risk.